This is Andrew Stotz of Stotz Investment Research to look at China, which is expensive and relatively unattractive relative to the rest of Asia. There's four parts to this analysis. The first part I'm going to look at is GDP. And what we can see is that overall there's high growth in China relative to other countries in Asia at about 6.9%. And that's for 2015. Our numbers are slow to come out in China. Of course, that's very slow compared to their past, but for now, that's where they're at. What we can see is the main driver is private consumption. Investment, of course, has kind of disappeared over times, but there are still positive contributions from both government consumption and investment as well as net exports. So let's take a look at the country for a moment, and let's see, the population right now is about 1.4 billion people. GDP is about 11 trillion US dollars, and GDP per capita is almost 8,000 US dollars. I can remember when that was like a 4,000 US dollars. So we can also see that the market capitalization is about 8 trillion US dollars, and the volume is about 70 billion US dollars per day. So a highly active market. Growth, according to analyst consensus, is back to double digit, expecting about 10% this year and 17% in the next couple of years. It's the second most expensive PE in Asia, and only Philippines trades higher. And keep in mind that this also includes almost 30% of the market cap of China is banks, and those are trading at very low PE. So if we stripped out banks, the PE would be much higher. Let's say a 16 times PE for 2017 would come out to be about 24 times PE. So expensive when you exclude banks. And let's look at our FVMR. What we can see here is that first, overall, the ranking is poor. Fundamentals, well, moderate. ROE is about 12%, slightly above the Asia average. But valuation at 16 times PE is the second highest in Asia, and it's got a low dividend yield. And if we were to back out banks, which are so heavy in the market, that valuation would look even less attractive. Momentum is poor earnings momentum right now. And also we can see that there's a relatively low beta. So volatility actually is reasonably attractive right now. First, let's look at the overall market. The top three sectors are the financials, which is 22%. I had said 30% earlier. Oops, that was my mistake. Industrials, 18%, and consumer discretionary, 13%. So the best sector was telecoms, up 39%, and China United Networks Communication was up 54% over the last 3 months. The worst sector and stock was the infotech sector, which had been so hot for a long time, and Guochuang Software was down about 27%. So there you have it on China, and to get access to additional research and articles, join our free newsletter at becomeabetterinvestor.net/join, and I will see you there.